Hey traders! Occasionally, clean setups emerge in the market that grab attention right from the start, and today, exactly such a pattern appears to be developing on the charts. Price action is building pressure around a key zone, and the nature of the movement suggests that the market is gearing up for a major breakout. However, smart traders do not rush into an entry here. Instead, they wait patiently for the right confirmation. My risk is pre-planned. The stop loss is positioned within a safe zone, and the profit target is set significantly higher than the risk, ensuring that the setup remains robust from a long-term perspective. Now, the most intriguing part is this. If the market continues to build momentum in the anticipated direction, this breakout could evolve into a powerful move. So let's wait and see. Will this setup truly deliver that perfect breakout everyone has been waiting for? Please support the channel by liking and subscribing. We will try not to make the video too long. Now we tell you how we want to trade. Let's start the video. We open the NZDJPY 10-minute chart. And don't sweat the time frame either. Next, you'll want to find those magic indicators. Head over to the Indicators tab and search for the ABC breakout. Select the indicator made by TradingView and add it to the chart. Now the indicator settings change for perfect signals. First, we have change pivot bars left, 20 to 18, after change pivot bars right, 5 to 2, after change max ABC ratio, 0.79 to 0, 82, after change TP1 risk-reward ratio, 0.5 to 0.3, after change TP2 risk-reward ratio, 1 to 1.6, here everything is fine after that. Click OK. Now we'll add one more indicator to make this strategy more powerful. Let's on the indicator search Buying-Selling Volume and select this one called Buying-Selling Volume created by K-Hun. Now let's access the settings of this indicator so we can modify it to suit our strategy. We have change volume index length 1 to 7. And here everything is fine after that. Click OK. Now the setup on the chart is completely ready. And this is where things start getting interesting. You can clearly see on the screen that I have already applied two powerful indicators. The first one is ABC Breakout by TradingView, and the second one is Buying-Selling Volume by Tae-Hun. I'm using this setup on the NZDJPY 10-minute time frame because this time frame filters out a lot of market noise and provides much cleaner price movements. Now observe the chart carefully. The market is not moving randomly here. Price is following a structured pattern. The ABC breakout indicator has identified important swing points where a potential directional move can develop. You can clearly see the A, B, and C points forming on the chart. These are not just normal markings. They are a smart way to simplify market structure. At this point, I'm not going to rush into a trade. First, I want to understand the market behavior properly. Because professional trading is not just about pressing the buy or sell button, it's about reading the market patiently and making logical decisions. Now notice another important thing. The buying-selling volume indicator at the bottom is showing market participation. The green volume bars represent buyer strength, while the red bars represent selling pressure. When both volume and structure start aligning in the same direction, the confidence behind the move becomes much stronger. You'll notice that price first creates a movement, then forms a retracement, and after that a breakout zone starts developing. This is the area where smart traders make logical decisions instead of emotional ones. Personally, I prefer entries where both market structure and volume support each other. Now let's focus on the trade setup. As soon as the C point gets confirmed and the market starts showing rejection, I still don't enter immediately. I wait for the candle close confirmation because fake breakouts are very common on fast time frames. Waiting for confirmation is never a weakness. In fact, this discipline is what separates long-term traders from impatient traders. Now you can clearly see on the screen that I placed my stop loss above the recent swing high, right above the arrow area. The reason is simple. If the market properly breaks that zone, it means the current setup may become weak. That's why placing stop loss in a logical area is extremely important. Random stop losses usually damage accounts, while smart stop placement gives the trade enough breathing space. And here's another important rule that I personally follow in this setup. I always try to keep my risk-reward ratio higher than 1.2. As you can see on the screen, the reward side is much bigger than the risk. This approach becomes powerful over time because you do not need to win every single trade. If your risk is controlled and your reward is significantly larger, maintaining long-term consistency becomes much easier. Now look at the chart even more carefully. After the entry zone, the market starts creating aggressive bearish candles. This movement is not based on luck. It happens because of structure, confirmation, and volume alignment. When selling volume increases and price begins building strong downside momentum, it clearly shows that sellers are taking control of the market. Personally, the most powerful thing about this setup is how clean the chart looks. Many traders use so many indicators that the chart becomes a complete mess. But here, only useful information is visible. Information that actually helps with decision-making. The ABC structure provides direction, while the volume indicator confirms market participation. You'll also notice that after the trade entry, the market delivered a strong downside continuation. This is where patience plays a major role. Many traders close their trades too early after seeing a small profit. But structured trading means following the plan properly. That's why I define my target areas in advance. On the screen, you can also see the TP1, TP2, and TP3 zones. These are not random levels. These are calculated target areas where market reactions are likely to happen. Step-by-step profit booking helps reduce emotional pressure and keeps the trader confident during the trade. Now here's something very important. No indicator can predict the future perfectly. Indicators only provide structure and probability. The final result always depends on discipline, patience, and proper risk management. That's why I never overtrade and always wait patiently for quality setups. In pairs like NZD-JPY, volatility can suddenly increase at any moment, which makes stop-loss placement and position sizing extremely important. Smart traders do not try to control the market. They control their risk. And that is what builds long-term growth. If you look at this entire setup overall, it's not just a combination of indicators. It's a structured trading approach where market structure, breakout confirmation, volume pressure, and risk management all work together. That's why the entries feel cleaner and confidence naturally becomes stronger. So at this point, the setup is fully active. The chart is clear, confirmation is complete, the stop-loss is placed in a logical zone, and the reward side is much stronger than the risk. Now the only thing left is to see whether the market continues the momentum or not. And patiently waiting for setups like this is what disciplined trading is truly about.